What's up, guys? My name is Andre, and in this video we're going to be covering the opening range breakout report on edgeful.com. So here we're looking at ES, and very importantly we're looking at the last month. So really want to mention that when you're looking at these results, they are going to change very drastically. Typically we recommend looking at the last 6 months, and then we're looking at the New York session here. We're also going to be covering a few of these sub-reports here as well, so make sure to watch this entire video. It will be extremely helpful for you to take advantage of this report. So first of all, what is the opening range breakout? It is the high and low of the first 15 minutes of the market open. So here we're looking at the New York session. So we are looking at the first 15 minutes from 9:30 to 9:45. You can see that right over here. So it's always based on the start time of the session that you use. So if you switch over to the London session, it is going to change from 3 to 3:15 a.m. Eastern time. So I will switch back to New York, and you can see here it is always the first 15 minutes. So that's very important. And what this report looks at is how often will price only break to the top side of the orb, how often will it break only to the bottom side of the orb, and then how often will it break both sides, so the high and the low, and then neither side. So again, we're looking in the last month here on ES, and what you can see, this is yesterday, this is a couple days ago. You can see I have my orb indicator on right over here. If I remove it, it's going to hide my levels, but this indicator is actually very cool. It automatically plots the high and the low of the first 15 minutes for you, so you don't have to do it, and I actually don't recommend doing it. But this is part of, these indicators are part of your edgeful plan. So if you go back to edgeful here on the right side, you're going to see TradingView Indicator Access. Click on that. You can put in your TradingView username here, and then you'll automatically get over 35 indicators that are specific and private to edgeful users. So the way you find your TradingView username is right here at the top left. You're going to click on that. You're going to see your TradingView username right here, and just put that into this box and everything will be taken care of. You're going to find them in your indicators section in your invite only. So the two that I'm using here are the market sessions and the opening range breakout. So if you look at the opening range breakout one, or sorry, if you look at the market sessions one, and I double click on this and I turn on my Tokyo and London sessions, this is very simply going to outline each of the sessions. So if you trade London, or you trade New York, or you trade Tokyo, or you trade all of them, this is going to be the indicator I recommend you have on your charts at all times. Personally, for me, I will hide the Asian and London session because I only trade New York. And then now we're going to put on the opening range breakout, and you're going to see, I'm going to show you the different scenarios. So let's get into this actual report now. A breakout in the last month means that price only broke out to the top side for the entire day. It never broke to the bottom side of the orb. So let's find that day here on ES. That was this day here. Right over here. You can see the orb formed right here. The first 3 5-minute candles makes the high and the low of the first 15 minutes. And you can see that price never got to the orb low. So this is a breakout day. This is continuation to the top side. It never broke the orb low here. And then you can see the 40% of the days have broken down only. So let's find an example there. You can see right here is an example of price breaking only to the downside and then never touching this orb high. And then you can see 55% of the time price will double break. And that looks like this. So price breaks to the top side and then reverses to the bottom side. Now this data is going to change very drastically. So you need to make sure that you keep up with this as the markets shift. This will definitely shift. And I'm going to show you an example of that later. But in this case, right now, what you want to look at is, if I just use this day as an example here, you can see that a breakout in the last month is extremely unlikely. Out of 20 trading days, it's only happened once. So it's not something that you really want to go for. If price breaks out to the top side, maybe you want to expect today to be a double break. And that's one of the ways that you can start to use and really implement this data, is to say, if I know that the breakout days are unlikely, if price does break that high first, like in this case here, if price breaks out to the top side first, maybe this is an opportunity for me to get short targeting the opposite end. So that's a really great way to take advantage of this. And now, obviously, you would be leaning against the 95% of this not happening, and then the 55% of the actual double break happening. So in this case, that's what you would be going for. Typically, this is going the double break, at least, I mean, not right now, but in the prior market environments, the double break was the more popular one. Now, the single break seems to be kind of taking over because this used to be on ES in Q1 of 2024, more than 80% the double break. If you look at Q1 of 2024, it was honestly insane where price would just break out and then flush to the opposite side, or break down and flush to the opposite side. So there is that. One of the ways with the opening range that you can, one of the things you can take advantage of, at least in this market environment right now, is if price breaks to the top side, you can get short targeting the opposite end because it is very unlikely for price to stay a breakout day. So that first break has to be to the top side, and then that's your signal to say, okay, maybe now I want to look for a short bias trade targeting specifically the orb low. Now let's say you wanted to change this to be the London session here. Now your orb time frame has changed because it's always the first 15 minutes of the session. So now it's from 3 a.m. to 3:15 a.m. So what I'm going to do here is I'm going to turn on my London session. I'm going to turn off New York. And now I need to shift my orb indicator to start at 3 a.m. right here. And then the orb has to close at 3:15. So now you can see that this is correctly plotting on the London session. And what you can see, let me make this a little bit bigger. Price, the first 3 5-minute candles, price breaks out to the top side and then reverses. You can see that in the last month, 90% of days have been double break days. So that's something to keep in mind. You definitely want to expect, at least in the last month, for price to break out of both sides. So the moment that price breaks out of one, it doesn't mean that you should short right here, obviously, or right here, but you want your bias for the day should be in the opposite direction. So in this case here, this is a great example. Price breaks down. Maybe you have a level of resistance, or maybe you have some sort of demand or whatever it is. Now this is your subjective entry signal to get long and then target the double break stat here. So it's really important that you know that the sessions very much dictate what you're measuring. So that's one thing that you need to be aware of. And actually, let's go to the London session quickly again. You're going to see in the what's in play exactly what's going on every single day. So you can see this is the current price. You can see right here, the current orb zone. This tells you where price is relative to the orb. So right now it's above the orb high, the London orb high. The orb size, the first break was to the top side, the extension, the breakdown extension, and there was a double break here on ES today in the London session. So this what's in play section will give you all the information you need so you can start to really dive into the data here. Let's switch back to New York for a second and let's go over some of these customizations. So in this case, I'm going to go back to New York and I'm going to reset my orb settings. Okay. So here, we're going to the customization, and let's just go through top to bottom. This is going to change your orb time frame from 9:30 to whatever you want to change. So if you change it to 9:30 to 9:35, or you use a 5-minute orb, that's going to change your orb high and low, in this case here, from 9:30 to 9:35. So if I click on this, now what's important is that you have to remember to change this here to be 9:35, and you can type here, so that's important. And now you can see this will update. There it is. So it's the high and the low of the first 5 minutes of the market open. You have to remember to update this, your chart here. And what's very important is that this is a limitation on TradingView's end. You have to be on a 5-minute chart or lower. If you go to a 15-minute chart, it's not going to be able to plot the 5-minute orb. It's always going to take the first candle. So you have to be, whatever orb size you pick, so it's 5 minutes, you have to be in a 5-minute chart or less. If you choose a 15-minute orb, you cannot have a 30-minute candle set on your charts. It's really important. And this is on TradingView's end. This is not on our end. So Obviously, the data is going to change here if you make the orb smaller. So let's move this back to the first 15 minutes. This one, so let me just save that quickly. Now this double break measure, this is actually a pretty unique situation here. I recommend honestly just leaving this at throughout the day. And what this is looking at is the double break. Wow. Oh no, okay. So I need to reset this as well to be the first 15 minutes. Okay, so you can see that today was a double break because price broke out to the top and the bottom side of the orb throughout the entire day. Obviously, it broke out to the top side first and then the bottom side. And that's what the throughout the day is measuring. If you change this to be the same candle, this is super rare to be honest, and I don't really typically recommend using that customization. But what you're going to see here is that it's only going to check for the first break. Does that specific candle break both sides of the orb in the same candle? Honestly, it's extremely unlikely. So what in this case you can see here, this candle that broke would have had to break to the downside and to back up to the upside in the same candle for this to count. And you can see it has not happened once in the last month. Just leave this to be throughout the day. Now, I'm just going to save this again. Now, the breakout criteria. This and this here are linked. So you can see that the breakout criteria, we have it by wick or by close. So in this case, when you have it by wick, the candle time frame doesn't matter. So if you're on a 1 minute chart or you're on a 30-second chart or you're on a 1 second chart, if price breaks down, it's going to break down. If you change it to be a candle close, so let me show you a couple examples here. It's easier on a 15-minute chart to find these examples. Let me see if I could find one. Okay, perfect. So let's look at this here. Let's ignore this for a second. So let's just look at this price action here. And you can see that the orb formed on the 15-minute chart and there was 2 candles that wicked above here. And let's pretend the day closed right here. So it was a break. In this case, let's just say this was the final candle. You can see that both of these candles wicked above. If you had the by wick category, this day would be a double break because it broke to the top side and to the bottom side. If you had the by close, the by candle close selected on a 15-minute candle time frame, this is going to change this day to be from a double break day to a single break day because there is no 15-minute candle that closed above the orb high. So now you're requiring more confirmation. You need a 15-minute candle to close above the orb high. So now let me try to find an example here. Let's see if I can find a good one. Oh, perfect example right here. So if you were to check this day by candle close, by 15-minute candle close, this is a breakout day only because there is no candle that closed below this orb low. If you were to check by wick here, this is a double break day because it wicked above and it wicked below. So this is right here. You can see obviously price wicked below and that would count as a break on the by wick. Now what's important is that you need to look at this, whatever candle time frame you're looking at here. So let me mark this out and then let's go to a 5-minute time frame and we go back to that day. Okay. So you can see on the 5-minute time frame, there was a candle that closed down here. So on the 5-minute, this would count as a double break day. But on the 15-minute, it's not a double break day. So I'm going to go back to the 15-minute here. So on the 15-minute time frame, it's not a double break day because there was no candle that closed down here. I just showed you this. So let me mark this out again, and I'll show you again. Just keep an eye right here. You can see that there's 2 candles that closed below the orb low, and there are obviously candles that closed above. So going back to that 15-minute time frame, and then now just to zoom in, you can see that there was no candle that closed down here. So that's really important. Now let's talk about the bi-weekday variant of this report. And I'm going to go back to by wick. That's the one that I personally prefer. And you can see how different weekdays behave. So I'm going to go back to the month here. You can see how different weekdays behave, right? And there's obviously very different situations. Now we're looking at the last month, so this is going to change, but you can see right here that different weekdays will have different situations. It is very important for you to look at all reports by weekday because the data shows universally that each weekday behaves pretty differently. Now, the last one that I want to show you here, or the last two actually, are the by size first. And this will filter for orb sizes. The orb size will always be in the what's in play once it opens. But you can see right here, the way to do this yourself is to go from the orb low. So now I'm going to my measuring tool. I go to the orb low and I go to the orb high. You can see this orb was 0.52%. It will be here at the top in the what's in play section, so you don't have to worry about figuring it out yourself, but 0.52% would fall into this category here. So this is an important piece too because the orb size will definitely change. So if there's a very, very small orb, obviously it's more likely to double break. Whereas, actually let's see what the data shows. Yeah, so logically that would make the most sense, but you can see here there was one day that had a very big orb and it also double broke. So you don't want to actually make any guesses here. You want to be going based off of the data. So even what I just said, the data contradicts it. So you never want to take anyone's word for what you think is going to happen or what's going to happen. You always want to look at the data. So you can see there was a massive orb, which obviously would make it more difficult to double break because price would have to break the top and the bottom side. And in this case, in the last month, there was one over 0.6% and it double broke. So that is the by size. This is obviously another important factor. And then you go to the by close. This is a pretty interesting one. So let me make sure my settings are correct here. And okay, so what you can see here is where does price typically close relative to the orb size or relative to the orb high and low. So in the last month, you can see that 30% of the time it closed above the orb high. Then 70% of the time it closed below the orb low. So this is where you can check kind of more for your overall daily structure, daily bias of most of the time I'm expecting price to close down here. I'm expecting price to close down here, which obviously the close of the session is at 4 p.m. So you're seeing right here, close below the orb low, close below the orb low. In this case here again, in this case here again, obviously this is one of the examples where it closed above. And this report helps you understand where price can close throughout the day. Now you can customize this to filter for specific days, so breakdown days or double break days or anything or whatever else. So you can see double break days. Let's just filter for that quickly. And it's pretty split. Double break days, whether they close above or below the orb high or low. Now it's important to see in the last month, price is not closing within the orb range. So that's an important piece. You want to expect that continuation, at least in the more recent times. If we go to breakdown days, you can see that all 8 days closed below the orb low. So that's an important piece there. If you're expecting price to only be a breakdown day, that's where you can look right here. If you guys have any questions about anything that I just said, please reach out to our support down here. We will answer your questions immediately. Don't wait to ask a question. All of this stuff changes very quickly, so I want to make sure that you have this data on your side in your tool belt so you can actually take advantage of the data and of this market environment. I appreciate you watching. Have a good one.